Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Press disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. And I am going to cover previous week fundamental analysis and important financial events. So let us take a look at previous week global market trends. The first one is the consumer price index CPI related to Switzerland, and I'm going to discuss the US dollar versus Swiss franc currency pair. Next we have the NFP, non-farm payroll data report, also known as non-farm employment change related to USA, and I'm going to discuss the euro dollar currency pair. Okay, so on Thursday, September 4th, 2025 at 6:30 a.m. UTC time, we got the Swiss inflation report. So let us review. Now, what is consumer price index, which is also known as CPI? M over M means month over month. The consumer price index month over month measures the change in the average price of goods and services purchased by households in Switzerland compared to the previous month. It serves as the key gauge of inflation, reflecting short term price dynamics across essential categories such as food, energy, housing, energy, and services. As one of the most important economic and financial indicators, CPI month over month provides insights into consumer purchasing power and overall price stability in the economy. Because inflation directly influences financial conditions, the Swiss National Bank, the SNB, closely monitors this data when shaping monetary policy decisions. including interest rate adjustments aimed at maintaining price stability and supporting sustainable growth. Generally speaking, a higher than expected CPI increases the likelihood of tighter monetary policy, strengthening the Swiss franc. A lower than expected print, on the other hand, may encourage a more dovish stance, potentially weakening Swiss franc and pushing the USD Swiss franc higher. Now, on September 4th, 2025, the previous number based on the calculations, the previous number was 0.0%, the forecast was also 0.0%, and the actual number we got is minus 0.1%. So the Switzerland's CPI unexpectedly fell by minus 0.1%, signaling mild disinflationary pressure. This marks a deviation from both the previous and forecast levels of 0.0%, highlighting weaker consumer price momentum. Now, market had expected stability, but the negative print raised concerns that inflationary forces remain subdued despite the data, pointing toward a softer inflation outlook. USD Swiss franc fell after the release. Let me show you the chart of US dollar Swiss franc currency pair. So this is the chart of USD Swiss franc, and on 4th September, this is what we got. Uh, we got an overall drop in price action of US dollar Swiss franc currency pair. Okay, so generally a higher than expected CPI increases the likelihood of tighter monetary policy, strengthening the Swiss franc. A lower than expected print, on the other hand, may encourage a more dovish stance. So what happened is that we got a minus 0.1% number. Okay, so the actual outcome is lower than the forecast. Normally, this points into disinflation and expectations for a more accommodative Swiss National Bank stance. Now, the classic reaction was Swiss franc weakness and USD Swiss franc could go up, but what we observed is the USD Swiss franc fell, suggesting the broader US dollar sentiment, risk flows, uh, and technical positioning overrode the fundamental signal. The broader market context is the Swiss National Bank remains in a delicate position because inflation is subdued but aggressive easing risk weakening the franc excessively, while global peers like the Federal Reserve continue to influence currency flows. Forex traders are increasingly focused not just on Swiss data but on relative central bank policies, global risk appetite, and US macro trends when positioning US dollar Swiss franc. So the key takeaways for the US dollar Swiss franc is the CPI fell below the forecasted level and the previous number, and we got a minus 0.1%. And the market reaction we got is we got a drop in price action of US dollar Swiss franc currency pair. So the conclusion is the September 4th, 2025 Swiss CPI month over month report surprised with a minus 0.1% decline, underlining subdued inflationary pressures. While this outcome should have theoretically weakened Swiss franc, the USD Swiss franc instead moved lower, showing that market behavior was influenced more by external factors such as US dollar weakness, global sentiment, or technical trading flows. For traders, the lesson is clear. Fundamentals like CPI shape expectations, real time price action often reflects the broader macro environment and market positioning. The next one is the non farm employment change. And this is what we got on Friday, September 5th at 12:30 p.m. UTC time. Now, what is non-farm employment change, also known as NFP? Well, the non-farm employment change report measures the monthly change in the number of employed people in the USA, excluding farm workers, government employees, and non-profit staff. It is one of the most impactful financial data releases in global markets, offering a real-time snapshot of the US labor market. Now, this data is basically released by the Bureau of Labor Statistics. The NFP report is closely watched by Forex traders and policy makers alike. The strong job growth typically bolsters the US dollar by reinforcing expectations of tighter monetary policy from the Federal Reserve, while weak readings may fuel a more dovish stance. So the September 5, 2025 non-farm payroll data report is, well, the previous number was 79K, the forecast was 75K, and the actual number we got is quite a bit lower at 22K. That's why it's written in red color as well. The US labor market delivered a major downside surprise with just 22K jobs added in the month of August. This was far weaker than both the forecast and the prior month's reading, pointing to a sharp slowdown in hiring momentum in the USA. So the Forex markets quickly reacted to the meaning we were expecting 75K or somewhere near to that because the previous number was 79K. But what happened is that we got a 22K number. So the Euro USD currency pair actually spiked higher. Let me show you the chart of Euro dollar currency pair. This is the daily time frame. And on 5th September, we got this bullish rally in Euro USD currency pair. Price action actually moved higher. So the Euro USD spiked higher as Forex traders priced in reduced odds of aggressive Fed tightening. The weak figure reinforces concerns that the USA economy is losing steam, raising the likelihood of a more cautious policy path. Now, the possible scenarios and the impact on Euro USD. Well, we were expecting 75K, and the actual number we got is 22K, which is much weaker than the forecast. So this confirms a significant cooling in job creation in USA. So this weighs heavily on US dollar, and it fuels the rally in euro dollar currency pair, which I was showing you earlier up over here. And if you zoom out a little bit, go to a 4-hour time frame, then over here you can see we got a nice bullish price action in euro USD currency pair. Forex traders now anticipate a more dovish Fed stance, limiting further rate hikes. So Euro USD has been consolidating near the resistance. This is the resistance right over here. Then we have another resistance right up here. So Euro USD has been consolidating near the resistance areas ahead of this financial news release, the NFP. So the weak NFP provided the catalyst for a breakout uh, to the upside. This is where we got the breakout, but so far price action did not manage to take out this old swing highs over here as well. We only got just one breakout of this high. So this confirms this bullish price action in euro dollar currency pair confirms the weakness in United States dollar. The momentum indicators now show renewed bullish strength. If you go over to a 1 hour time frame, you can see this is where we got a strength in Euro USD. The RSI went above the 70 level. Okay, so this confirms the dollar weakness. Though the euro dollar currency pair could face profit taking if the rally becomes overextended. So, we might get a complete reversal in price action as well. And we only got few pips drop over here. So it's quite possible that euro dollar could resume the uptrend. So the overall analysis is the September NFP report was a clear disappointment with job creation slowing sharply to 22K. This outcome signals a weakening USA labor market and increases pressure on the Federal Reserve to maintain a dovish stance. For Euro USD, the release provided a bullish impulse, pushing the Euro USD pair higher as dollar sentiment softened. However, traders should remain mindful of potential volatility, particularly if Fed officials respond with cautionary remarks or if the US dollar uh, shows some signs of strength or weakness. Okay, so the conclusion is the September 5 NFP report reinforced the theme of a slowing USA economy with employment growth collapsing far below expectations. The immediate reaction was a rise in Euro USD driven by a weak dollar outlook. Looking ahead, the trajectory of Euro USD will depend not only on US labor data but also on wage growth, inflation figures, and the Fed's response. For now, the bias leans towards further US dollar softness, but traders should remain alert to volatility as the market reassesses the USA financial growth and policy outlook. Okay, let's discuss the previous week global market trends. I'm going to discuss the euro dollar and US dollar Swiss franc currency pair. Let's start with the euro USD currency pair first. So if we take a look at euro dollar currency pair, this is the daily time frame, and in daily time frame the RSI is not overbought. If you check out the 4 hour chart, the RSI did go above the 70 level, you know just momentarily. So we might get a short-term decline in euro dollar currency pair. We zoom out a little bit over here. You see we got kind of a drop in price action over here. So euro dollar is probably going to rise up one more time. That's the way how I see. Okay, so it looks quite possible that euro dollar is probably going to rise up again. Okay, now if we do get a breakdown in price action, like we get a breaks below the support area over here, below 1.1702 level, then obviously market is going to change the uptrend into a downtrend. Okay, otherwise it's still an uptrend going on. Next one, we have the US dollar Swiss franc. USD Swiss franc, we got a nice drop in price action. If you check out the 4 hour time frame, let me quickly copy the template over here and then apply it inside the US dollar Swiss franc. Okay, so USD Swiss franc, we got kind of an oversold reading with the RSI. But if you check out the daily, it's not oversold. So in 4 hour and in 1 hour, we're getting kind of a bullish leg, in price action. And right now, the USD Swiss franc is actually trying to rise up over here. So maybe on a short-term basis, we are going to get a bullish leg over here inside US dollar Swiss franc, and then expect further weakness in price action of US dollar Swiss franc. Now, let me talk about current week's macroeconomic events and financial data releases. I will be covering the key developments in forex market with a focus on fundamental analysis. The first one is the core CPI month over month related to USA, and I'm going to discuss the Euro USD. The date and time is Thursday, September 11th, 12:30 p.m. UTC time. Next one is the GDP, gross domestic product, month over month related to United Kingdom, and I'm going to discuss the GBPUSD currency pair. The date and time is September 11th, September 12th at 6 a.m. UTC time. So let's start with the first one. What is the core CPI month over month related to USA? Well, core CPI means uh, consumer price index. Month over month means that we are going to do the analysis, and the number are basically coming from month by month basis, and it measures the monthly change in the average price of a basket of consumer goods and services, excluding food and energy, which tend to be more volatile. By filtering out these categories, core CPI provides a clear picture of underlying inflation trends and helps assess the cost of living and price stability in the USA economy. As one of the Federal Reserve's key indicators, core CPI plays a critical role in shaping monetary policy. A stronger than expected reading can prompt the Fed to consider tighter policy through higher interest rates, which usually strengthens the US dollar. Conversely, weaker inflation could support a more dovish stance, pressuring the USD lower. Now, on September 11th, 2025, the previous number was 0.03%. The forecast is also 0.3%. The actual data not yet released. So, Forex market anticipate no change in the monthly core CPI reading, with the forecast matching the prior month at 0.3%. This stability suggests inflationary pressures are steady but not accelerating. So, Forex traders will watch closely for any deviation from expectations, as even a small surprise could shift Fed policy expectations and drive the Euro USD volatility. Now, the postal market impact on Euro USD: if the core CPI is higher than the expected uh, 0.3% number, then it means stronger inflationary pressure may reinforce expectations of a hawkish Fed stance. And this is likely to strengthen the US dollar, pushing the Euro USD lower. Now, if the core CPI matches the expectations, we get 0.3% number, then the market reaction could be limited as the outcome is fully priced in. We are probably going to get a sideways type situation in euro dollar currency pair. Now, if the core CPI is lower than expected, meaning it becomes less than 0.3%, then it signals softer inflation, raising the likelihood of a more dovish Fed outlook, and this is likely to weaken the US dollar, lifting the Euro USD higher. So the overall analysis is the September 11th core CPI report will provide fresh insights into United States inflation outlook at a time when the Fed is waiting its next policy moves. With expectations steady at 0.3%, markets appear braced for continuity, but any surprise, whether higher or lower, could spark volatility in Euro USD. So the conclusion is core CPI remains a crucial driver for the US dollar. A stronger than expected print would bolster the case for tighter Fed policy, strengthening the US dollar and pressuring Euro USD lower. Conversely, a weaker outcome uh, would undermine dollar strength and support Euro USD gains, with consensus pointing to stability at 0.3%. So the forex traders should be prepared for volatility if the data surprises in either direction. The next one is the gross domestic product, GDP, month over month related to United Kingdom. Now, what is GDP? The gross domestic product month over month measures the change in the total value of goods and services produced within the United Kingdom compared to the previous month. As one of the broadest measures of economic activity, GDP reflects the pace of growth, business performance, and overall economic health. Because GDP captures the heartbeat of the economy, markets closely monitor it for signals about the Bank of England's future monetary policy. Higher GDP readings point to stronger expansion, which can raise expectations for higher interest rates and support the British pound. Now, the lower GDP readings suggest economic weakness, increasing the likelihood of policy easing and putting up some pressure on the GDP, the British pound. Okay. So on September 12, 2025, the report expectation is the previous number we got is 0.4%. The expectation is 0.0%. The actual data not yet released. So the previous month GDP growth of 0.4% reflected solid momentum in the United Kingdom economy. However, financial markets now expect growth to stall at 0.0%, signaling a potential pause in expansion. The data will be closely watched as it could confirm whether the UK is heading towards stagnation or simply experiencing a temporary slowdown. So the possible market impact on GBPUSD currency pair is if GDP is higher than the expected 0.0%, this suggests a stronger than anticipated growth momentum, and it could bolster confidence in the UK economy and supports the British pound, and the GBP/USD currency pair is most likely going to push higher as the British pound strengthens. Now, if the GDP matches the forecast, then it indicates stagnation with growth in flat lining, and market reaction may going to be muted, and the price action of GBP/USD currency pair, it is probably going to move sideways. Okay. And if the GDP is lower than expected, meaning it becomes less than 0.0%, meaning you get a negative number, then that signals contraction and potential economic weakness. So this is probably going to increase pressure on the Bank of England to consider a more accommodative stance and likely to weaken the GBP and dragging the GBP/USD lower. Okay. Now, the broader market context is the UK economy has been navigating a challenging environment marked by the slowing global demand, high borrowing costs, and persistent inflation risk. While services remain resilient, weaker manufacturing and construction could weigh on GDP momentum. Traders are also watching how the BOE balances growth risk against its inflation fighting mandate. So for GBP/USD currency pair, the relative dynamics between the BOE and the Federal Reserve will play a key role if UK growth proves resilient, while uh, US dollar shows some softness. The pound may find support. Conversely, if we get a weak GDP alongside with firm US financial data numbers, this could tip the balance against the British pound. So the conclusion is the September 12th UK GDP month-on-month report will be a critical gauge of country's short-term growth trajectory, with financial markets expecting a flat reading at 0.0% after last month's 0.4% gain. The outcome could drive volatility in GBP USD currency pair. The stronger than expected growth would support GBP and lift the GBP USD currency pair. And if you check out the chart of GBP USD currency pair, let me show you. It's already going up over here. It looks bullish. Okay. Now, if we get a weaker than expected data, this would weigh on the pound, pulling the GBP/USD lower. As inline result may keep GBP/USD steady, with traders focusing instead on other drivers such as the US data or BOE commentary. For traders, this financial release will be key in shaping near-term expectations for United Kingdom monetary policy and the British pound performance against the US dollar. Now, let's take a look at current week global market trends, and I'm going to discuss the euro dollar and US dollar Swiss franc currency pair. So first one is the euro USD. Euro USD is currently falling down. We got kind of a drop in price action in euro USD currency pair. And if price action is going to break below 1.1702 level, the chances are high that price action is probably going to drop even further. Next one is the US dollar Swiss franc. US dollar Swiss franc is trying to rise up over here. And if we do get a bullish breakout above 0.7995 area, the chances are high market is going to rise up even further. Next, we have the GBPUSD currency pair. So let's take a look at GBPUSD currency pair. The trend is clearly up inside GBPUSD currency pair. If you take a look at daily time frame, the way I see market is probably going to rise up over here in GBPUSD currency pair. Okay. Next one is the spot gold. Okay, spot gold XAUUSD pair. So spot gold, the trend is bullish in weekly as well as in daily time frame. So the way I see market is probably going to rise up even more over here inside spot gold. If you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. So what we have learned today, well, we discussed about the CPI related to USA, and we discussed the euro dollar currency pair. Then we also talked about the gross domestic product GDP financial data report month or month related to United Kingdom, and we also discussed the GBP USD currency pair. Next, we also discussed the US dollar, Swiss franc, euro USD, GBP USD, and spot gold. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, September 16, 2025, same time. Okay, so that's pretty much it for the time being from my side. Have a nice day and bye-bye.